Welcome to Illuminati Silver. We tell you the truth about silver. Today is Friday the 25th of June 2021 and we're carrying out our regular morning update on the news, financials and gold and silver prices. And today there is a little bit of scandal in the UK Parliament. So let's take a look. Here we are, it's Friday morning, 25th of June, and it's 10:25 a.m. GMT plus 1. And here, where we're located, everything seems rather sedate. What a great word for a Friday morning. In other words, not a great deal going on. But we shall see in the news that a few things have been going on in the UK Parliament. But first, let's look at international news and Bloomberg. Merkel, Macron back travel curbs, scold Greece for lax rules. I'm sure Greece are quivering in their shoes being scolded by Merkel and Macron. China crushed Jack Ma and his fintech rivals are next. Now this is worth a quick look. We're quite intrigued by this. Ant has lost at least $70 billion in value since its scuttled IPO, and companies from Tencent to JD.com are under pressure too. The winners? The country's state-backed banks. What a surprise. It's been 8 months since Jack Ma, the most famous business executive China's ever produced, all but dropped from public view. 8 months, and by conservative estimates, some $70 billion. I think it should add the word poorer there. That's the optimistic view on how much Ma's Ant Group Co. has plummeted in value since the outspoken billionaire openly pushed back against Beijing and Chinese authorities promptly quashed Ant's plans for a blockbuster initial public offering. So the answer is, do not condemn the government in China. Otherwise, there will be repercussions. Now, there are repercussions in the United States too. Let's look at this. Banks easily clear stress tests, setting stage for payouts. Now, this will really annoy quite a few people, and rightly so. Wall Street banks are poised to announce a deluge of dividend increases and stock buybacks after the Federal Reserve's stress tests showed the industry built up a stockpile of cash during the pandemic. Now, what's so surprising here, of course, is that we all know that banks generally do not make money traditionally in low interest rate environments. So with the Fed funds rate just toying above 0% or 0 to 0.25%, what the heck's going on? Lenders can announce their plans for distributing capital after the market closes on June the 28th. And the industry's strong results mean payouts may be the largest ever following the Fed's annual exams. Early estimates indicate the 6 biggest US banks, including JP Morgan, Chase & Co., Bank of America Corp. And Citigroup, could return more than $140 billion to shareholders. Now, this is one of the reasons why equity markets are still on a surge upwards. Not the only reason, but one of them. And of course, who are going to be the beneficiaries of this payback? Well, clearly the directors themselves, because they will have all sorts of share options and shareholdings for which they will receive these additional dividends. And of course, capital appreciation in the shares themselves. It really does hurt all of us when so many people have suffered in this pandemic to see that the banks have made so much money. And part of the reason they cleared the stress tests, and we won't go into it now, is because the Fed made it easier for them to do so. ECB to start supervising large investment firms as law changes. And finally on here, Mario Draghi's warning to Europe is right on, and this is an opinion comment and by Lionel Laurent. The EU's €750 billion stimulus plan is a big deal, but with so much lost ground to recover, more ambition is needed. I'm not going to read all of it, just a paragraph. As the European Union's leaders gather in Brussels this week to take stock of the bloc's response to the COVID-19 pandemic, the feel-good narrative is gathering steam. Very interesting indeed. Now, over in the UK, this is the blockbustering news. Hancock not commenting on affair with aid claims. Yes, Hancock, our Minister of Health in the UK government, Secretary of State for Health, is involved in a scandal. Matt Hancock will not comment on reports of an extramarital affair with a close aide, Friends of the Health Secretary says. The Sun published pictures of the minister embracing Gina Colandangelo, whom he made a non-executive director of the health department last year. A government spokesman said the appointment had happened, quote, in the usual way, unquote. So, is the usual way to kiss the minister and get a non-executive director post? Perhaps we all know how to gain these rather senior appointments in the British government, but we're not suggesting that's what's happened. No. It says everything has been done properly and no rules have been broken. We had Britney Spears yesterday and Matt Hancock today. Broadly, not a great deal of news, a lot of it primarily COVID related. In America, of course, the tragedy in Miami. Rescuers listen for signs of life. That's a really sad story. I don't want to focus on that, but 99 people have been unaccounted for after the 12-story complex had collapsed. So that's very, very sad. And our condolences to anyone who's lost someone there. Biden backs infrastructure compromise deal. Biden backs a $1.2 trillion infrastructure bill, but places a big condition. And that big condition, we have a deal, said the president. The 8-year plan includes funding for roads, bridges, the power grid, public transport and internet. But the deal is far from being done. We're in a race with China and the rest of the world for the 21st century. He continued, adding, the agreement signals to the world that we can function, deliver and do significant things. Democrats argue the bill's proposed $40 billion investment in the Internal Revenue Service for beefed-up enforcement would generate a net gain of $100 billion. Mr. Biden already signed a $1.9 trillion coronavirus stimulus back in March. By the end of July, Congress also faces a deadline to again raise the nation's borrowing limit, which is already at $28 trillion in debt. Biden's condition. The president wants to enact another roughly $6 trillion spending package that would roll in his party's priorities on climate change, education, paid leave and childcare benefits. It's being drafted by Senator Bernie Sanders. That measure is expected to include tax increases on the wealthy and corporations. It would be passed by a budget reconciliation process that would not require any Republican votes in the Senate. There ain't going to be a bipartisan bill without a reconciliation bill, Mrs. Pelosi said. Mr. Biden echoed that sentiment in later remarks from the East Room of the White House. If this is the only thing that comes to me, I'm not signing it. It's in tandem. So we know what his bottom line is, allegedly. That's the big news in America, and what has been the result? Well, stock markets rocketed. More money has moved again into the equity markets. And we can see that the Dow Jones is up 322 points, the S&P up 24 and the Nasdaq up 97. Admittedly still below 1%, but nevertheless, bearing in mind that they're virtually at all-time highs yet again, it's a creditable performance. Not so hot in Europe at the moment, or the UK, although we're up 5 points. Generally, the market is broadly unchanged or marginally lower. Asia Pacific markets closed up. Dollar spot index 91.72, still weakening just ever so slightly. Nothing of particular concern one way or the other. US economic calendar, let's look. Yesterday, we had initial jobless claims coming in at 411,000. That's down on the previous week of 418, so it's going in the right direction. The continuing jobless claims, it's important, we always quote the initial, but it's important to look at continuing. That's down to at 3.39 million compared with 3.53. Durable goods orders are considerably up in May at 2.3% compared with minus 0.8 in April. And we have the GDP revision. We said yesterday we didn't think it would be any different, and it isn't. That's still coming in at 6.4%. The key data is out today. Personal income, consumer spending, core PCE price index, and the UMich Consumer Sentiment Index preliminary. Important to listen to these and also to note the comments by the various Fed governors as well. But this data will be quite important if it's not as is expected. So what's happening on gold and silver? Well, gold is actually over the last 24 hours up $2. It's currently standing at $17.84, which on the week is up $19 since Friday's close. We can see the chart, it is gyrating. Better news for silver though, because silver's up 20 cents today, or in the last 24 hours, and is trading at 26.23, which is a good 42 cents above Friday's close. Not significantly higher, but at least if it holds over $26, that will then portend to the various forms of supports and resistance that we covered yesterday, which I won't go over again today, otherwise we'll just be repeating ourselves. So that position hasn't changed dramatically. Bitcoin strengthening, up $1,700 in the last 24 hours at 34,800. As you can see, there's a general climb in Bitcoin, but looking at the week scenario, we're still down nearly $5,000 on the week, or 4,300. That's it for now. Thank you for listening. Please subscribe, share, comment, press the bell sign. And if you haven't had a chance, for those who follow cryptocurrencies, we published a video yesterday, our 21st in our edition of Bitcoin versus gold and silver. Do have a look at that. Have a great Friday. We're going out to walk along the barrage. We have a local barrage, and we're going to spend an hour or two this afternoon having a leisurely walk on this rather sedate day. Thank you for listening. Disclaimer. Illuminati silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.